What's going on, EGA Tribe? Welcome back to another Everyday Growth Advisors Daily Brief, where we plan the trade and trade the plan. That's right, we do this market breakdown for you so that you don't have to do it yourself. Welcome back. It's another great day in this market. We saw lots of volatility in the second half of the session. Mainly, markets traded choppily for the first half of the day before a volatile move towards the end, as the Fed decided to keep interest rates unchanged and as expected, pretty much, right? Very quickly, right before you watch this video, make sure that you smash the like button and subscribe if you haven't yet for market daily updates. And we also have been hearing from you, so continue to drop comments in the video below if you want me to break down a specific ticker, and I'll do that for you when we can. We appreciate you guys showing us love, and we're hoping that we can get up to about 50 to 60 likes in this video. So if you can, please take a second out of your day. You don't know how much it helps us, but smash that like button. Boom. Okay, so let's get into the daily brief today. As we mentioned before, the Fed's stance on monetary policy will only change when inflation persistently stays above 2% target for a period of time. Now, this all has to happen while unemployment rates recover significantly. And the market doesn't seem to believe the Fed, and generally we saw some selling occurring yesterday, which was pretty common, right? We see that happen pretty commonly. What actually happens up yesterday was we saw a lot of selling off and then buying up by algos, which was something that was surprisingly not really expected. I thought that we may go a bit further down before buying up, but you know what? I'm not complaining. I think it was a good thing that we saw some major buying, right? I'll get through the technicals in a second here, but I just want to kind of talk about a little bit about what the Fed minutes were saying, right? So essentially, we see a lot of the data for inflation and job numbers, even though premature, showing the challenges of reopening an economy that was shut down abruptly, right? When the coronavirus crisis hit, major economies around the world, we saw lots of supply and demand shocks and intense structural and frictional unemployment. Now, when a shutdown like that occurs on such a major level, it takes some time to open this economy back up. And it's kind of like a big, clumsy machine, because people get fired for all kinds of reasons, and to get them rehired costs money, takes time, and people also have the free choice to go wherever they will, right? And so this causes a lot of issues with seeking employment. Not only that, we should see job numbers recover strongly in July and August, with majority of unemployment benefits ending in June. This should force people to get back into work, and we see this as a major catalyst towards recovery, as we will be tracking consumer spending and savings as a key report as well going into this next few weeks, right? We do see that big tech and value stocks with strong balance sheets will remain the most investable names in this market with such uncertainty. That means your Apple, your Microsoft, your Google, your Amazon, and so on and so forth, right? The FANG stocks plus some of the major blue chips, right? So we see many of these seeing increased interest in the liquidity pumps through last and this week, and we will probably see many more opportunities, as we have alerted our Discord members in these past couple of weeks. Now, if you're interested in joining our Discord community, where we provide timely market updates and important analysis, click on the link in the description below and check us out. We have a beta membership, which is only $38 per month, that you can be a part of now. All right, so let's jump into the technicals and break it down without a frown and peel this onion. Great, so first things first, right before we jump into SPY here, I just wanted to show you the Fed statement. So as they have mentioned, the committee seeks to achieve maximum employment inflation rate at 2% over the long run. Inflation having run persistently below this longer run goal, the committee will aim to achieve inflation moderately above 2% for some time, right? And also they want to keep the target range from 0 to 0.25% until it maintains this rate. And they also want to see that maximum employment is reached and inflation has risen above 2% for a while before they start to increase interest rates. And so, in addition to the Federal Reserve, they also increase its holdings of treasuries by at least $80 billion per month. And then at the same time, so this is mainly their statement and what are the implementations. So I will look at their implementations here. So effective from today, they will be taking maintaining the federal funds rate at target of 0 to 0.25%, and then this would be the repos that they're conducting to plumb liquidity by buying treasuries, right? So here you go, overnight repurchase agreements. Now they're doing it at a 0.05% offer rate. So this is for reverse repos when banks are trying to basically cash in on their repos. And so, okay, all of these things are great. I don't think that anything here changing creates any systemic or blatant pressures against the market. But still, besides all of this, we saw that majority of the members don't see a rate hike until 2022 or 2023, right? So the market's already starting to price in this data, and it's starting to say, okay, you guys are saying it's going to happen then. Let's, I'm going to start to position myself from now, right? So the market moves very quickly. So what actually happened yesterday? Well, we had on SPY right here, a move down to the 420 level, which is the key level of support. We spoke about this yesterday, right? And now the next level for support is going to be the 416 level, right? The 416 level is going to be the next level because this was the strong resistance previously, and now it's going to become strong support, right? This was resistance, and now it becomes support. So if we do break 416, though, this opens up a whole can of worms down. And so the 416 would see us correcting roughly about 2% in this market. Right now, we've only had a 1.4% correction. And a deeper correction would, if we go for a full 5% correction, which is a nominal correction, it would see us go all the way down to the 400s. Okay, so those are the key levels that we need to watch here. Now, pivots to hold for today. We really want to hold 420 if possible. If we can't hold 420, we're gonna go all the way to 416. Okay, so this would be a short-term correction here. This is also the larger term trend line, as you can see. We did break this shorter term trend line, which was signifying the uptrend, and now we may bounce on this shorter term, the longer term trend line, which is the 416 level. So I think that there will be a possibility for us to sell into the end of this week, as quad witching is also ending on Friday, and we may see general market volatility that will close us off at roughly a 2% correction of some kind, right? If we do get to this level here, we'll see about a 2.5% correction, which is nominal for this market. So this is the levels that I'm looking at, and I will be trading towards it. This red line is the one that I will be looking as a potential target. For now, I'm going to move this target down here, and we'll see if we actually get there. So that would be a nice little pullback on this next run to the upside. However, I do think that the next run to the upside will be the last wave for us to have another bigger corrective wave to the downside, maybe a 5 to 10% kind of a drop. So we're looking at a July downward pressure, but who knows? We obviously can't predict anything. We're going to go at this a day at a time and see what happens. Now with the QQQ, we had a pretty shallow pullback rather than a deep one, right? We had a break of the 38.2, a inability to close above it, and then now we're correcting back downward into the 337, right? The level that we want to find support at today will be the 334 on the QQQ, 334.50-ish, right? Which is the previous resistance, right? This level is now going to become support. And if we do break below this level, then the next support becomes around the 330s. Okay, so the 330s and then the 325s after that. So there are multiple levels here that we need to break, and this is still a bull trend. Remember that. This is still a bullish market on the NASDAQ, okay? Even SPY is still on a bull trend. We're just correcting downward here to run higher, okay? Which is very normal and very consistent with stock market moves. We cannot keep moving up in a straight line. That's not how this market works, right? So those are your key levels with QQQ today. If we hold above 335, this should be really nice. I think that we will get a wave down at 335 though, so do not overextend yourself to bullish positions. By the end of this week, we should know where this market's positioning itself. As I mentioned yesterday, it was a terrible day to trade, and I didn't trade yesterday. So sometimes listening to our videos does pay off grandly if you just turn up and listen for these short videos. Okay, great. Now I'm going to just run through a couple of tickers that I see opportunities in, and I'll keep you guys updated on. This is going to be a speed run here. DraftKings with a nice pennant setup here might be a nice little potential to the upside. However, with the market being bearish, I don't think this is a high conviction setup. I will be watching this closely though. If we can find a setup here, I'll update you guys further. Arkk. We had a nice bounce on the support zone here. I feel the next level would be 109, but we still have a lot of support, and that was a very strong buy up yesterday. So expect the Arkk to see some interesting bullish action for these next few sessions. If we do see this bullish action on Arkk, it will be a nice thing to take to the upside into the 120s for the foreseeable future. Next, PayPal. Also with the strong buy up yesterday, but exhibiting once again bullish, bearish selling. We might need a wave down into the 262s before going ultimately up to this 38.2 extension. Boeing coming down for support, breathing for air at 240. We may see a bounce at this level, so I might be playing a bounce play right here. This seems like a nice level to get in once again for this next run to the upside. I like the fact that Dow Jones has been weak recently, and this gives me opportunity to get in on Boeing if I want to at a cheaper price. Apple breaking out above, below, trying to hold this level very strongly. Looks like it wants to move to the upside. We will be watching this one closely. It looks bullish. Very strong buy up yesterday, and today we should see continued selling and trying to break down and test this 128 level once again. And that's all I have for you guys today. So let's do the conclusion so that we have you guys broken down. So once again, if you have watched our videos and you enjoy them, you have made some money with us, make sure you drop a like. You don't understand how important it is for you to hit the like button, because that's how YouTube's algorithm will share our videos. If you don't hit the like button, we don't get discovered, and I really do hope that our EGA tribe can get bigger. So thank you very much if you already have, and I truly appreciate you doing so. The market is in a little bit of a halt, right, as I mentioned yesterday, and we can't go creeping into all-time highs just with no amount of good news being held at the same time. Remember, I've mentioned a couple of times before, we need all of the keyholes on this key, the key to align with the keyholes in order for this market to move to the upside. Bulls are very, very sacred animals because they technically need some coercion and lots of love in order to see upside for a prolonged period. Okay, we need all of the engine lights to be green before we see this market climb to all-time highs again. So therefore, don't overextend to the upside. Keep your risk on the downside for now. I recommend opening up some short-term hedges. If you want, you can play weekly puts, take some day trades on them, on the buy them, obviously puts on the upsides, and just play them to the downside. Seems like an easy enough plan for these next 2 days as quad witching ends this week, and I will keep you guys continually updated through the end of this week. I hope that you guys enjoyed this video. If you did, make sure you drop a comment, let me know. And if you made it all the way to the end, I love you. All right, have a good day, and I'll see y'all tomorrow. Bye bye.